Talked about labor, talked about inflation data. What other economic indicators are you looking at to predict the next moves of the Fed?
So I look at the housing market, specifically fixed residential investment. There's an old saying: the housing cycle is the business cycle, and the housing market, fixed residential investment is only around 4% of the economy, 4.5% of the economy, but yet 7 out of 11 post-war recessions have started in the housing market. Why is that? The reason is it's highly levered to the business cycle via the interest rate channel. So what happens in monetary policy, really transmits really quickly and pretty efficiently through the housing market, which makes the housing market very volatile. So when you start seeing a slowdown, or if you want to anticipate a slowdown or an acceleration of the economy, look at fixed residential investment, because fixed residential investment is first in, first out. It's a leading indicator, and it gives you a really good idea of where the economy is going to go. And you kind of glossed over, but I'll get back to it, which is the volatility of the sector. When that area starts to really ping around and get volatile, then that introduces risk into the business cycle. So to answer the question, it's fixed residential investment, and specifically construction employment and construction spending. Those are really key indicators to understand the near term, 2 to 3 month, 6 month out movements in the economy, I think.
I want to stay on housing just for a second. When we start to see rates come down a little bit on the long end, which obviously when then we see the mortgage rates come down a little bit, do you worry that because we've had such a really, I'm in Florida, so in Florida, we've had such a tremendous run higher. My wife's actually in real estate, and slowly but surely we're starting to see supply creep up. I'm always picking her brain and saying, what's going on, in the market, and just keeping an eye on it. Even though I'm a market guy, my wife's a real estate person. So I kind of play off that a little bit, similar to what you're discussing, is why I think it's a good economic indicator. I'm seeing supply continue to come on, even with rates down ticking. I'm not seeing stuff sell. Do you have a concern that even though rates start to come down as a positive for the buyer, that supply might just hit too hard and ultimately drive housing prices lower? Wouldn't that kind of work against as a positive economic indicator?
Yeah, so what I look at really is not so much supply, because the market's going to clear at some point, right? At some point, the market will clear. And I think a lot of these supply concerns are driven by other factors, like, I know insurance is becoming a problem. There's a lot of houses that just can't be insured because the insurance market, and I heard Florida is one of those spots. The insurance market has really got some wonky things going on that they're above my pay grade, but I know that they're a problem. So that's going to distort things. And I think what's also going to distort things too is people just don't want to move, because if you have a lot, if you're an older person on a fixed income, you want to downsize. Do you want to give up your 2% mortgage for a 7% mortgage? Probably not. So that's going to just introduce some distortions. I think it's more useful to look at actual economic activity. So, housing sales in and of themselves don't really do a whole lot for the economy. It's a simplistic way to look at it, but you're basically just switching paper, right? You're going to a title company and registering, things, and maybe you'll do a kitchen. But for the most part, the real juice from economic activity comes from, new single family residence construction. That's really what makes its way into the economy. The actual building of a home, which has an insane amount of inputs through the supply chains that go into building a house. So whether it's lumber, whether it's new appliances, whether it's, whatever, windows, all that kind of stuff gives you an insane amount of bang for buck in terms of economic impact versus switching paper between buyer and seller. So I think it's more useful for understanding the economy. It's more useful to look at those metrics. I think the inventory things are just kind of more of they're not causal, they're more residual to other activity, but it starts with the actual construction.
I'm glad you pointed that out. That makes a lot of sense to me. I mean, so it's basically the new home sales is the number that's more of a focus versus existing homes.
Correct, because again, the existing home, you're switching paper. I buy from you, you buy from me, and again, maybe somebody wants a new bathroom or a new kitchen. So there's some economic value added there. It's just, again, there's a lot more nuance in the way I'm presenting it. It's very simplistic, but for the most part, this is kind of really the way it works in the economy. The way when a new home is built, not only is there spending associated with the materials I mentioned, but think about the labor. Think about all these, folks that, roofers, framers, plumbing people, foundation people. Think of all that money flowing to these into these people's pockets every week. These folks are paid weekly typically. So think of how that happens versus I buy from you, you buy from me, whatever. We switch some paper. How many people are employed in doing that? Maybe a realtor, maybe a title appraiser company, but it's a handful of people versus when you got a new house going up, you got dozens of teams going up, putting a house up. So it's not just the supply chain, it's also the labor chain. And that goes back to what I was telling you about how important it is to look at the construction employment activity as an indicator for the forward path of the economy, because that really, again, it's spending, it's money going into people's pockets. These people have families. A lot of these people are, a lot of these people are paid in cash. They go out and they spend it Friday. They go out and spend it, and they pay bills and enjoy the residual from that. So that is a lot more bang for buck in terms of looking at the economy.